Welcome back everyone to the new tape. If you've been watching AVGO, you know what this looks like. The stock has been range bound for weeks. Up one day, down the next. No real direction. Most traders are bored. A lot of them have already moved on to something else. But here is the one thing. When everyone gets bored, that's usually when something happens. If you're new here, just do me a favor, hit subscribe. The free daily note is linked in the description. No paywall, no spam, just the note. And now let's run the tape. AVGO closed Friday at 392.23, not a bad day. It was down near 374 early. Then rallied all the way back to close near the highs. That's a bullish reversal candle right there. But what's more interesting, it is happening underneath the surface. Volume 17.3 million shares on Monday, down from 23.6 million at the start of last week. That's a 25% drop in volume in just a few sessions. Now, declining volume during a rally is usually bearish. It means the move isn't getting participation, but declining volume during a consolidation or coil. That's different. That means the sellers are exhausted. That means nobody's interested in selling at the levels. When sellers are exhausted, it doesn't take much buying to push the stock higher. Pull the chart, price at 392, short term 385, mid term 393, long term at 379. So price is sandwiched right between the short term line below and the mid term line above. That's a tight range, only about $8 between the two lines. And here's the kicker, the distance between those lines is getting smaller every day. The lines are converging. That's what a coil looks like. Price gets tighter, volume gets lighter, and then, boom, the breakout. And now, which way? The structure still favors the bears if you look at the bigger picture. Short term below mid-term, that's still bearish alignment. But price is right here at the mid-time line, testing it. And with volume drying up on the sell side, the path of least resistance might actually be higher. Let me give you both sides. If we break above the midterm line at 393 and close above it with a volume, that's the confirmation. And that would put price above both the short and midterm lines. Bullish alignment. At the next stop from here, the top of the channel at 438. That's about 12% upside from here now. If we roll over from here, if we can't get through 393, and we fall back below 385, then the coil reserves to the downside. We're looking at the retest of 370 swing low. Break that and there's not much support until the long-term line at 379. Wait, actually the long-term line is at 379 and the swing low is at 369.50. That's about a $10 gap, so if 360 breaks, there's some air pocket down to 360. Or so before the long-term line rally comes into play. Now the trade plan, two ways to play this. The first one, the aggressive way. If you believe the coil breaks to the upside, you can start a position here around $392. Tight stop loss below the recent swing low at 369.50. That gives you about $20 of risk on a 390 entry. Roughly 5.5% risk. If you're right and we get to 438, that's about $46 upside. Roughly 2 to 1 reward to risk. No great, but if the breakout catches, it could get faster and further than you think. The second, the patient way. Wait for the breakout. Wait for a daily close above 393 with expanding volume. Then enter on the pullback or on the next day's continuation. Your stop goes below the breakout level. Lower win rate maybe, but higher conviction. You miss the first few dollars, but you don't get trapped into a fake out. Personally, I lean patient on this one. Coils can resolve either way and the broader market is still messy. But I'm watching this very closely because when AVGO moves, it moves fast. And the setup here is getting tighter by the day. Risk board, AVGO is still in bearish alignment. Price hasn't confirmed the trend change yet. Volume declining in a range is normal, but it means there's no conviction either way. All CMAs have been volatile. One bad headline and this whole setup invalidates. And the overall market tape is still fragile. Don't size up until you get confirmation. Trade the setup you see, not the one you want. Don't front run the breakout by too much. If you're aggressive, keep the position small and the stop tight. If you're patient, wait for the close above 393 with volume. Either way, know your level before you get in. Trade safe, stay safe, can't wait to see you on the next tape.